Asher. Welcome to the EcomCrew podcast.
Hey, thanks so much for having me.
Yeah.
Really looking forward to the discussion.
Absolutely. We're here to talk about everyone's favorite subject, how to get your hands on some more cash to buy inventory so you can go on this endless journey of I never have any money.
Well, hopefully not always.
It's it's an interesting business that we're in. At least from my perspective, I've been in business for myself for over 20 years total. I've done all kinds of things from consulting when I was younger to help people with their computers to affiliate marketing to drop shipping or whatever it might be. And I don't know, I think I kind of got used to this concept of when I worked, the money came in relatively around the same time and there really wasn't any expenses per se to think about to get those sales unless you were maybe advertising or something. But again, it was kind of like this bang bang event. You spend so much money on advertising, the money comes in. But with e-commerce and running a physical products brand, it's a much different story. I mean, you have cash needs that seem to never go away. And as you grow, the cash needs grow right along with it, actually outpacing the money in the bank. And so I think we're going to talk a little bit about that, maybe some solutions to that and things that you've experienced, and I'll interject as well some of the things that I've dealt with along the way.
Sounds great.
So before we get too deep into that, maybe let's just take a minute and tell people a little bit about you. Who is Asher and what have you been up to this point? And then we'll get into some ideas that we have for funding.
Yeah, sure. So, I'm one of the co-founders of Uncapped, and what we're really passionate about is that founders shouldn't have to give away equity to fund growth. So we provide fast, flexible funding to e-commerce businesses for marketing, inventory, or hiring without personal guarantees or dilution. My background, is in startups. This is like the third business that I've started over the years. And the biggest problem I always had was getting the funding that I needed. And I think like working with like hundreds of e-commerce founders, I've seen how they've struggled too. So for me, it's a dream to get to work on Uncapped. Every day I get to help other entrepreneurs get the funding that they need. And our first customers were my friends. So from the start, we've really created a product that is fast and fair and transparent and everything you'd want to give to a mate. It's the product I wish always existed. We're now in 22 countries, including the US, UK, Germany, Poland, Spain. Our business has been growing exponentially. We're deploying like hundreds of millions of dollars. And we actually now fund more businesses in a day than a typical VC will fund in a year.
Very cool. Excellent. I always like to do this full disclosure on the podcast. This is not a commercial or paid spot of any kind. This is also not an affiliate relationship. We're not being compensated in any way. I just think that it's a good topic. I mean, it's one of these topics, again, like I said, it's everyone's quote unquote favorite topic. No one really wants to talk about the cash needs. It's not really all that fun. But because I've personally been there several times over my e-commerce career, I thought that it would be great to have you come on. We're also not going to just talk about Uncapped here, right? I mean, the idea here as we move on to the next stage of this podcast is to talk about our personal experiences, and maybe at the end we'll talk about Uncapped and your guys' solution just a little bit. But just like to get that out of the way, because some things we do are paid and some things are affiliate stuff, and we always like to make sure that's disclosed. Not the case in this situation. All right, so now that I read the legalese part, let's talk about some of your experiences. One of the things that struck me as interesting when we were talking beforehand a couple of days ago is that you've raised a bunch of money yourself. And so let's talk a little bit about those experiences.
Yeah, well, Uncapped was really born out of the frustrations that I faced when I was launching and running my first business, back in 2003. I was young and I was just trying to raise 100K. And I probably had 100 meetings. I've got 100 no's. And, I didn't want to take financing from the banks because they all wanted personal guarantees. And venture capital, it just wasn't ideal either because I didn't have a track record. I didn't have connections or like a warm introduction. And so I just repeatedly missed out on growth opportunities. And then, when it came around to my second business, I thought I had it all figured out, and I actually raised millions in venture capital money. But then I also got terribly diluted. And I just started to realize that like the options for me, they were really limited. And it was just depressing to think that I could work so hard and then just own so little of my company. And I noticed it wasn't just me, right? Like I think growing businesses, they're often left to choose between either like raising costly money from equity, whether it's like angels or VCs if they can get it, or they're like burdening themselves with like traditional debt, or just being forced to like self-fund.
Yeah.
And yeah, so I just thought there must be a better way, and that's kind of what led me to start working on Uncapped and hopefully trying to bring a more fair way for companies to get funding.
I'm curious, what changed for you from that first business where you raised that 100K, or wanted to raise 100K but couldn't? I guess it sounds like you or chose not to, I should say, because it sounds like you had options but you decided not to take them because you didn't want to give up equity. Versus when you raised the millions of dollars for the VC thing, you're like, oh, let's just go the other direction, let the pendulum swing, and I'll give up everything to raise this money. What was it that changed mentally for you that made you go down that other path?
I'm not so much sure that it's like changed mentally, but I think certainly when you're an entrepreneur and you do have a track record, you can actually just raise capital a lot easier. And it makes sense, right? Because I think the biggest thing an investor is worried about is execution risk, right? So when someone comes with money, they want to know, like, can this guy or girl or person, can they just deliver? Will they be able to do what they say they're going to do? And if you've ran a business and been successful, okay, it's a lot more comfortable to actually hand over that big check. And so I think it opened the option to me. And perhaps, I was lured by the idea that, raising huge amounts of capital is like success as an entrepreneur. But actually what I realized is that like real success as an entrepreneur is actually, owning a lot of your business and having a business that's profitable. So, I think I'm kind of on my third phase of thinking about it. And probably at Uncapped, I think we raise the money so that other founders don't have to.
Makes sense. Yeah, and I think what you said there is really important in terms of you got to kind of pay your dues, right? I mean, I've been in business for like almost 20 years now. We just took on an investment through a group. One of the things we bought last year. I think I was able to do that and be able to do one of the terms that we did because I've got 7 years of e-commerce experience to that point and had the clout to do it. I think if this investment turns out to be successful, ultimately it'll make it a lot easier to do things the next time around. I know that as someone that invests my own money in a lot of things these days, I ask the same question, so it's only fair, right? I mean, if it's somebody who has never run a business before and they're, it's a much different story than someone who you feel like is going to give you a much better chance to get your return on your investment.
And yeah, and I think you probably also have a lot of the scars, right, to prove it. And you've probably identified some of the things that just like didn't work out or didn't go right. And, being able to now speak to an investor and have that confidence, it probably just makes them much more comfortable with like you as a potential person to put their money in.
So another thing I wanted to just talk about real quick is like raising money. Maybe we get a little bit into some of the other companies you had if you want to talk about it, but raising money for e-commerce, I think is different because, I don't know, again, the other company you had, the venture capital type thing you raised, there's lots of different types of companies that can raise, like, let's say it's for a SaaS company or some new, like, like maybe it's like an Uber or some type of digital trend type thing, right? Those guys all went through venture capital at some point, and you really need it because in terms of as you're growing, you got to have cash. But like a lot of those venture funds, venture funded companies, like they go through and they spend money on a really nice office and hire a bunch of coders and spend money on ads and do a bunch of things where there's really nothing to show for it at the end, which can be really scary from a raising money standpoint. But from an e-commerce standpoint, a lot of that money, or at least when we raise money, always goes into something physical, right? So you're actually raising money for something that like has collateral of some sort. You typically will start raising money when you've already had success with a product. So it makes it a lot more comfortable lending money, I think, in e-commerce because you know exactly where the money is going to. You hopefully have got some sort of historical sales that shows that there's history there, and it's not quite as much of a risk as like just dumping money into some venture funded startup. They're buying $6,000 Herman Miller chairs or something.
And yeah, I would agree. I think there's like very unique challenges that e-commerce founders face for funding. But on the flip side, that also creates opportunities. Like, when I think about our clients, typically they're coming to us because when they're starting out, they have, really challenging terms from their suppliers, to start off. And so they need that capital
Yep.
first to get going. But then as well, of course, they have typically a lot of seasonality in their business. And so the moment where actually they most need the cash is often when they're at the lowest
Yeah.
cash point. It's like before the golden quarter, when they really want to like being doubling down on their inventory, or then if they have the inventory, they want to be able to pump up their marketing because of course everybody is trying to race for those customers and for those ads. So I think it's a unique situation there. But then on top of that, if you find something that works as an e-commerce founder, it's incredible. Like, we have customers where they have 5 people in their business and they're doing millions of sales every month, and you can actually build a business like that. And, if you find the right strategy to acquire those users, you can scale so quickly. But then your business also has all these other complexities. And, what you were talking about, you just need more to be able to put more fuel
Yep.
onto that fire. And so I think it is a unique thing to be an e-commerce business, especially right now. But what's tough is, of course, like traditional funding models, they don't understand e-commerce, right? Because it's a strange dynamic. They're right. They're used to thinking about how do you fund a SaaS business who has recurring revenues and has this, a 3% churn is really predictable. Like that kind of thinking, it's not going to apply. And it's also not the same thinking that's going to apply for how do you fund a physical store where, perhaps that's
Yeah.
when you go into a bank. They're imagining you're going to have a business that is like operating in this way, and that gives them comfort with this like bricks and mortar. So it is a strange time because the opportunity is immense, right? Like we have seen just incredible e-commerce growth in this last period, but of course, like the solutions just
It's
haven't kept
interesting when
up.
you're talking about banks because they get these legacy businesses like a bricks and mortar retail store, or maybe a franchise or whatever it might be. It's laughable to me because they're actually the more risky investment for them. The online e-commerce business that has very low overhead and is quite nimble. But yeah, it's just fun. Some of the conversations I had with banks have been pretty hilarious over the years. All right, so shifting gears a little bit. I mean, let's talk about some of the things that you are seeing in in funding options. I mean, obviously, we'll talk a little bit about Uncapped and some of the unique things that you have, but what are some other things that people can be looking to get money that isn't egregious? I mean, there's some ridiculous things out there you can get yourself into, and I would beg you, please. Like, I know it can seem tempting, especially when you have a hot product and you just need to get your hands on some cash. There's almost loan shark type or payday loan type programs out there that I think are quite dangerous. But some of the more mainstream things that are out there that can work, what are some things that you're seeing?
Yeah, well, I mean, the first option is always like self-funding, right? So before you get into the real options, and like that's the first option that like founders have. And the benefit, of course, is that you're going to have like full ownership, but growth,
Yep.
of course, can be slow because you can only reinvest those profits. So assuming like, hey, that's not the strategy you want to take, you want to go for a more aggressive plan, you're on another set of options there. We kind of talked a little bit about like the bank loans and like, depending on where you might be in your history, if you have 2 years of history and you're willing to potentially sign a personal guarantee, maybe you have that house that you're willing to like put up for your baby, then a bank loan could be an option for you. You'll probably get actually a really good interest rate. You'll probably get something very affordable to be able to grow it. But you got to have to become comfortable with that level of risk that you're taking. And I know for me, I guess that just never felt like the right thing to do, especially when I did have like other investors, in my cap table or a part of my business. Me taking that kind of risk,
Right.
it just wasn't the right mix. You've got angels to consider as well. And like, I think angels are interesting because if you find an angel investor who, actually really gets you, they can be absolutely incredible. My first business, I managed to actually find an angel. He was actually also a philanthropist, so perhaps he had pity on me. But he was incredible because he helped us like secure partnerships with huge organizations like L'Oreal, and got us probably some credibility that we wouldn't have otherwise had, and some great advice. So angels can be a thing, but of course, you are giving away equity. And whether it's like to an angel or a VC, if you do any kind of funding round that involves your equity, you're probably going to give up 20 or 30% of your company with each round of funding. and you might also give up a board seat and other control. And once you do that, you can just never get it back. And it doesn't suit every business. I think in e-commerce, it can sometimes actually be totally silly. Like, if you have a business that's generating a good return on ad spend, and like, say you put £1 into Facebook and you get £3 out, if you already know that, to then go and give away your equity so that you can just buy more Facebook ads, that's just like,
Yep.
just crazy, right? But it happens all the time. And, people are forced to kind of be in
Absolutely.
that situation.
Just real quick on
There's crowdfunding.
raising or giving away equity thing. I mean, I can just speak to this real quick because I've had some experience over the years. My kind of take on this at this point is that if you're going to give away equity, it should be for like a really good reason, right? And just needing cash isn't really a great reason. I think that if you're looking to diversify or shed some risk, that's a good reason. You might like have, and that can be a reason to take on the money, but like you just want to take some money off the table, or you're just trying to not have all your eggs in one basket. It's kind of like the reason why you said you wouldn't sign a personal guarantee. Similar type of concept. One of my favorite reasons to give away equity or talk about partnership of some sort is when you're getting something that you don't have into the relationship. So whether it's their contacts or their knowledge, their expertise, whatever it might be, then I think it's better, right? If you're starting like some sort of SaaS company and you have no programming knowledge, and like this is like your lead developer, okay, maybe that makes sense to like go on the ride with them because they're bringing something to the table that you just could never do. In the case of the investment I did with Bill and Andrew, I feel like they have expertise in M&A and other things that I just never had exposure to that, I've just learned a ton over the last year, like working with these guys, and it's absolutely well worth it. But just like you said, just raising money to like go buy more ads or go buy more inventory, I think you'll probably regret that, especially when it comes time to sell the business.
I think that's a really good way to frame it as well, because I think with any investment, you're always thinking about like, what are you willing to give away? And and what's the value add that you're going to get? And you just want to understand that ratio. And it sounds like you've made some good choices of like picking that the right way. But yeah, I think folks often don't. Maybe just to round out those last options, I was going to just mention crowdfunding as well as another way of raising funds. It's like, where you get like small amounts of capital from like a very large number of individuals to finance your business venture. So I ended up running one of the largest crowdfunding campaigns that was out there previously, because it is a lot less exclusive. You can have a successful campaign that really like validates your business idea and potentially builds your customer base. It works really great if you're a B2C business. And, in my last company, we crowdfunded exactly for that reason. We wanted to get a bunch of our customers to be investors and to be advocates in the community and talking about what we do.
Yep.
But it's a lot of work. It's like a multi-month pre-campaign, and it's also totally nerve-wracking. I don't think I've ever done anything as stressful as run a crowdfunding campaign, because you've got a threshold to meet, and it's sort of like all or nothing. And accordingly, I guess the consequences of failure are just really severe, because, if you're turned down by an angel investor,
Yep.
you can always seek out another one. But if your crowdfunding campaign fails, it's pretty hard to recover, because like most platforms, they're not going to let you list again. And a failed crowd campaign, at least to the majority of other investors, it either signals like your plan or your execution just doesn't
There
get
is
it.
a platform called
there's
Kick
another
Further
option.
that we've had on the podcast before. We'll put that in the show notes. They do something similar to this. It's kind of a crowdfunding thing. I've been an investor on that platform. I think it's a good rate of return. If I was an e-commerce business, it's a little bit of a high rate to stomach. It's not obnoxiously high, but it's high. It's 15% or maybe a little bit more, depending on if you're new to the platform and other things. And so you got to be really careful. I mean, like I think anything over 12% interest starts to get tough to make it work with your margins, because e-commerce is a relatively low margin business to begin with. So you start looking at things like like Kick Further, or I think that's the name of them, they're probably in a 15 to 18% range, especially when you first get started. So it just makes it tougher to still make a profit when you have to pay those interest payments.
Yeah, and I guess what's interesting is also in e-commerce, there's also like very specialized ways of like raising capital. I think what's been a really great innovation is that now for each specific use case of like what you want to fund, there's often a product that is like designed for that. So, if you have inventory, there's like inventory specific financing, whether it's like an invoice finance or another model. If you're, trying to fund marketing, growth, there's options there. So it's nice that like more of those things are coming, as well as like what the various different platforms than the e-commerce world provide. Creates more ways at least to access capital. Sometimes I would say as well, though, for folks, it's not necessarily about like who's the cheapest. It's also sometimes really important to get the capital at the right time, because often you are comparing an opportunity, and you might say, well, I have a customer who I potentially could acquire in these coming months as this period is less accelerating. But then you're like, well, if I actually went to the bank, or if I went to this other provider and I spend like months going out and trying to raise from equity, actually I would just miss the opportunity entirely. So kind of what you're comparing is more like, hey, do you actually get that and further your business along, or do you just stay where you were and actually just miss out on it completely? So there's a lot to consider there when you're thinking about the costs. But I guess ultimately for me in all of it, I just felt like the solution that I really wanted as an entrepreneur was missing. And, I guess that's where we kind of get to Uncapped, is like being another option for founders that hopefully solves a lot more of those other challenges.
I guess one of the other options we haven't really talked about yet, which I certainly have talked about before on the podcast, is just, something like Amazon Lending, PayPal, Shopify. A lot of these platforms kind of get this whole thing of, Amazon's not stupid, right? They have tons of cash in the bank, and they know that they know what your sales are, and so the risk for them is quite low, and they're taking the money right out of your payments, and so again the risk becomes even lower. The challenge is that Amazon lending can work incredibly well until you have any type of hiccup, because it reminds me of what was the movie? Oh shoot, I'm having a brain fart. Like one of these old mobster movies where a Goodfellas. Gosh, couldn't remember the name of the movie for a minute. But it's like there's this scene where like he gets with the mob, and he's like, if you have, he's like, F you, like where's my money? Like you didn't get customers today. Like F you, where's my money? Like the supplier didn't show up, and you don't have good, F you, where's my money? And that's kind of like how Amazon is, where it's like you did like something went wrong, or you're like sales didn't quite come through, or whatever it is, and they don't care. They're like, where's my money? Like they're going to take it like right out, which can, it works great. We got very lucky. We've used it extensively to grow our business before we sold Color It. It was very high stress, but like we were lucky that we didn't really have any major hiccups, and we're able to make the payments and continue to grow and take more money and continue to grow. But I was very, very aware that at any moment, if something went wrong, the whole thing would come down like a house of cards. And even though it wasn't a bad business at that point, or there wasn't something fundamentally wrong, it would have been very difficult to recover, because they would have just destroyed our cash flow if there was any type of hiccup. And so just something to be aware of. It can be intense. Same thing with the PayPals and the Shopifys, but they are out there if you need money.
Yeah, and I guess what we're trying to do is create that innovation that goes like one step beyond, because I guess with each of those solutions, they're only looking at the revenue that you're generating on that specific platform. But the typical e-commerce business, you're trying to be multi-platform, try to get the sales across them. You might also have some wholesale that you're doing, and that could be a big chunk of your business. And you want to be able to access capital that covers all of those things. But as well, like you don't want to end up in the problem that you were just talking about, where you could get, just shot out because you just don't have that, where's my money situation. What we did with Uncapped is, just try to find this like new way for founders to grow their business, where they can get, between 10K up to 5 million pounds for a flat fee of 6%. And the business only repays the capital as they make revenue. So there is no set repayment date. There's no compounding interest. There's no equity or personal guarantees. And, it means that because the repayments are tied to your revenue, if the business does slow down or that supplier, just doesn't come through with that inventory order, you're not caught out as a founder. The repayments just slow down. And we think it's, the most affordable,
Yeah,
flexible
definitely.
type
When we
of
talked
financing
before,
that's
because I was
available.
skeptical, before having you guys come on the podcast, I've heard of plenty of other funding schemes or structures or whatever, and you start asking questions, and I don't know, it starts to seem like the marketing on the surface is really good, but it's actually a really bad idea to like get involved with a loan shark type of thing or something, or but the concept, seemed pretty interesting to me. I mean, I think these are the types of things that can help take the pressure off of you. I mean, I can just speak again from personal experience when we had a $750,000 Amazon loan and our payments are 56K a month or whatever they were at that point, or maybe they were even more than that. It's just a lot of pressure every month to like have to have that money because the seasonal business or you buy inventory, things don't work out quite the way that you want. Again, anytime along the way, the whole thing could have just kind of fallen apart like a house of cards. Having the ability to withstand the unknown is really important. And to give you like to be quite frank, I mean, again, I think a lot of things in life are luck and timing. Had we been in that situation in 2020 or 2021, we probably would have been pretty screwed. You think about like how something coming out of left field that you can't plan for in COVID could very quickly put you in a really bad spot if you have fixed payments, right? And that's the thing that I like about the concept of Uncapped, where, okay, it took longer than expected for your next inventory order to get here because of COVID shutting down China or COVID screwing up supply chain or COVID screwing up the ports, or maybe you had a business like a travel bag business that was just destroyed because no one's buying this stuff any longer. In all the other scenarios we talked about, you're basically bankrupt. And with something like Uncapped, yeah, you still owe the money, and obviously you guys want to recover your money, but the fees fixed and the timeline to repay it, the ability to stretch that is there should something come up. And I think that's the thing that's appealing to me. That like I can again relate from a personal experience of not sleeping very well for a couple of years as we had that cloud over our head of you never know when something might go wrong and Amazon's going to want their money anyway. I don't know. So that's why I kind of advocate for it. I haven't personally used it, but in terms of a concept, I love it. So yeah, let's drill into it just a little bit more. I mean, you mentioned you guys will do 10,000 pounds to 5 million pounds. I know you're based in the UK. We talked about this before, but you guys do offer U.S. dollars to Americans or Canadian dollars to Canadians. You guys operate in a lot of the world. I'll switch the conversation to dollars just because that's what I'm used to talking about the most. But if I wanted to borrow $100,000, let's talk through. You said it's a 6% fee, so that means I'm going to have to pay you $6,000 to borrow this money. What would be the repayment terms that I would expect if things are going well, and then what would happen if things don't go as well?
Yeah. So like say if we lent you, 100K to spend on marketing, we'd basically take back a fixed portion of your daily revenue, which could be like 5 or 10% until we got that 106K back. So, you're not paying any other hidden fees. You're just paying that 6%. And, the typical timeline that our customers repay is like, 6 to 12 months is usually kind of where it sits. And sometimes, we get in a situation where it takes a bit longer because we just didn't forecast that right. And, or, there was a challenge like you mentioned, and it takes a bit longer to pay. But, that means the business still gets to keep going and keep growing. And we've had lots of those situations, definitely like in the COVID period, of having founders where they were a small business, concerned that their sales would slow. But yeah, because they didn't have fixed repayments, they just didn't have to worry, and they could just keep focusing on like reinvesting their business and continuing to grow. So as a model,
And
it's actually
what
super
do
simple.
you like in terms of leverage? Like what revenue does someone need to have, or do you even dig deeper into financials? Do you look at profitability to like qualify for? I use that $100,000 example, so I'll just stick with that. To be able to borrow $100,000 from you guys, like what would you need to do to qualify for that?
Well, I guess generally we'd say, Uncapped is great for you if you're generating sales online for at least 6 months and you're doing
Okay.
at least 10K of revenue per month. So, the businesses we look like can be very young. And I guess why we say 10K, because I think that's the place where you start to move from something being like side of desk to actually being able to do enough revenue that you could actually take some money out and be able to like cover some of your own bills, maybe start paying yourself a small salary. But also, having that track record of 6 months, it shows that you have something that can actually start to scale. You're really building a brand. And that's what we're looking for. We want those businesses that are going to keep growing, where we can invest and then be a partner with them, so that we keep funding them again and again. And our typical company will come back multiple times for capital, which is awesome, because it's such a win-win relationship. And for us as well, what we try to do is really try to understand that business and work with that founder to identify the opportunities for growth. We use a lot of data to kind of make our decisions. And so one of the powerful things we can do is like turn around that data and help the founder spot maybe some opportunities they hadn't thought of, because of the patterns that we see in the number of businesses that we work with, but also connect them to like partners and other suppliers that we work with that might be able to, reduce their costs or accelerate their revenue, which creates a lovely win-win, because obviously we get repaid from revenue. So we want those businesses to be growing really fast. And it's like, I think the first funder investor relationship where like the incentives are like completely aligned. So, that's the approach. The other thing is a little bit different, is probably like how we actually understand the business. So like we connect to the data sources that the business uses to run every day. So it's not like you need to go and fill in some massive application, or like, when you go to a bank and try to, bring some pitch and try to convince them that any of the numbers that you've put into the spreadsheet are meaningful. What we're trying to do is just connect to those data sources, which might be your Shopify account, your Amazon account, your Google and Facebook ads. And we get this like 360 view of how your business is performing. And off the back of that, we can make a data-driven decision about you and understand the growth potential. And we remove the bias as well, because traditionally so much of investing has always been about who
Yep.
and who you're connected to or where you went to school. We're not looking at any of that. We just want people who are building great businesses. And so we get that data, and we can then make an answer usually in 24 hours and get
Very
you the
cool.
funds so you can get back
All right,
to growing
so
your business.
to nail down some more specifics, as I love talking about this type of stuff on the podcast, and for people to understand what they're getting into before they reach out. Again, using this 100K example, I'm a business. I think I would qualify, but I have no idea like how you guys really evaluate that. So like if that's kind of the target number that I'm looking to borrow, what would my sales need to be? Obviously, every business is going to be a little bit different, but in a ballpark, I mean, do you need to be $1 million seller per month to borrow 100K, or $100,000 seller per month, or what is it ballpark?
A good rule of thumb, I would say, is like thinking about whatever your last month's sales is probably reflective
Okay.
about what's the amount of capital you should take. More so because more so not that we wouldn't be able to give you additional capital necessarily. It's more about the fact that
Yeah.
we don't want to give an offer that we don't think you can repay. And if you start borrowing, if you go to those loan sharks and folks, they might try to give you more aggressive amounts of capital. But the challenge will be like, you don't want to become over leveraged, where, when you're trying to pay back those funds, that it's just taking, a too significant portion of what your sales are. And then that could, hit you further down the line. So, the idea is that if you're doing 1 times your sales, that gives you enough to be able to invest in your marketing and your inventory, which are the two biggest things, of course, that every e-commerce founder needs. And it's a reasonable way to be able to pay it back. But equally, if you need more capital, you start off with that amount, you show your business is growing, you pay it back, and then come back for more. That's a beautiful story, and I think a really great way to play it, so that
And
you end up
I
in
think
a
that
strong
one
position
month
long term.
sales is actually pretty reasonable. It's significant to any business, right? I mean, it can really, especially when you start thinking about that most businesses should be able to turn their inventory in 4 months or so. It really can basically give you 25% more inventory, working capital, et cetera, to be able to really grow your business, which is, again, is really significant. All right, so let's say I'm doing 100K a month in sales. I want to borrow 100K.
Yeah.
I want to do it in this example to go buy a new product. I got this new, or let's use an even safer example. Let's just say I have a product. I have a successful business at this point. It's a one SKU business, but I just can't keep up with it. It's growing so quickly. Now I need to borrow more money to like place an even bigger order this next time. That's what I want to do with your money. So you approve me to take 100K. I want to go place this $100,000 order with a supplier. I only need 30,000 of it to start with because I want to put down a deposit, and then I want to give the other 70K to them 3 months from now when the order's ready. Is that something you guys can do as well?
Yeah, beautiful. That's like a great situation to be in. And I think that's the right way to play it too. Like, why take out more capital upfront than what you actually need? I think taking the right amount for your situation is a smart thing to do. That's what I would do as a founder. But we've also seen people take some of the current challenges and turn them into an opportunity. Like every e-commerce founder I speak to right now complains about
Yeah.
supply chain and inventory and all those challenges, right?
Yep.
Especially if you're importing things from China, for example, it's super frustrating, right? Where lead times have like basically doubled. And so in this last period, it's been great to see some of our customers, for example, go out and say to their supplier, actually, I'm going to double my order, but can you give me, a 10% discount? And so they negotiate that in, and then of course, come to us for the capital to cover that and pay a 6% fee. But, it basically ends up being such that they are actually turning a profit on that. So, I think if you can be smart about it and actually take what are the challenges in the current market, you can basically make that into an opportunity and make your business and your overall
All right,
margin
so
stronger.
going down this timeline again, I think we're getting pretty close to kind of wrapping up the thought process. I've borrowed 100K, got these new products coming in. Now that I borrowed $100,000, it sounds like you will take 5% of daily sales. So thinking through the math, if I'm doing 100K a month, I guess that means I'm doing about $3,333 a day basically in sales. And so you're looking to take, I'll just round things back off here, like $150 a day basically in payments. How does that work? I mean, Amazon only pays you every 2 weeks. They're paying you directly, every 2 weeks into your checking account. They hold money for a while as well. Like where do you take the money out? Are you taking the money out daily, like right out of a checking account, or do you pay it monthly? Exactly what's the timing and all of that?
So typically we're using a direct debit, and it's sort of it's happening continuously, but managed with that. There's also other situations where some of our customers, you're right, like are getting paid on a particular cycle. So we'll tie and match to that cycle as well to make it make more sense for them. But often you're getting funding from multiple sources and revenues coming in at different times, so it just kind of balances out and it makes it nice and simple. Also, just for tracking, there's just little things. Like I think when you're running a smaller business, just being able to keep on track of like, okay, how much are those payments, and be able to audit them. It's nice when you just see, okay, I saw the revenue come in, I can see this piece got taken off. It's all lined up, versus having to go back and doing some, accounting at a later date. I was never a fan of that. I was like kind of asleep in accounting class, I guess. But I think making it easy is kind of our goal for entrepreneurs. And I think that's
every
just part of
day,
the way
$150
it's
or so is coming out of the checking account, ACH'd, and you do that until the money you borrow plus 6%. So in this case, 106,000 is paid back, and you have sales continue to grow. The payments are going to go up from 150 to something else. But conversely, if something happens and like you run out of inventory for a minute while things are coming in and sales go to zero, then payments are a zero. When the thing comes back in stock, payments pick back up again. And there's no other hidden fees or BS or gotchas of anything else to this story, right? Okay.
Nothing. We don't take any equity. There's no personal guarantees, warrants, hidden fees. You're just paying a flat fee. The other beautiful thing is that one of the things I found really frustrating when I was like raising money was the documents.
Yeah.
Normally you would go to raise a round and you'd get hit with like this book of like legalese, where, God help you if you knew what was written in there. And the same is actually for like some of the innovative payment players, right? They'll throw like a 40-page document at you with all the ways that they're going to be able to sue you. And, what we've done is we made our agreement super simple. It's like 6 pages. It's all written in plain English. So you don't need a lawyer. You can understand it yourself, what you're signing up for, and feel confident, And I just thought that just also as an entrepreneur just takes another anxiety or pressure off this whole funding situation. Because I think as you said, like, you're always waiting, like, what's the gotcha, right? And I think the best way to convince people of that is for them to read that.
Yeah, again, I mean, for me, the appealing part is definitely the payments go down as sales go down. It's something I can get my head around and feel comfortable with. I mean, some people, don't have an issue with having a personal guarantee or some of the other things that are out there. I mean, if you don't, I think banks are the way to go, especially in this current environment. If you're willing to put a personal guarantee on the thing and have fixed payments, interest rates are quite low. They'll typically give you a line of credit. It's pretty simple once you get approved. But the challenge is getting past that point. It's a minimum of 2 full years of tax returns that you have to have before you can even go start a conversation with the bank, which means you're probably in your third full year of business. Doesn't mean that you don't need cash then. I mean, we're more mature now and have explored those relationships, but it's the early days that are really the biggest challenge I found in e-commerce when you have like a successful first year e-commerce business. It's just the pressure is kind of overwhelming to get your hands on cash, and not a lot of people, like you were saying, like understand it. And so the alternative really is the Amazons of the world and the pressure that comes with. And so I like this concept. I think it's neat. If people are interested in learning more about it, how can they reach out to you and Uncapped?
Well, actually, I had a little bit of a special offer for your listeners. So maybe I'll share that with you. And basically, if you're listening and you have an e-commerce store and you make at least, $10,000 per month, and you want to, either scale your campaigns or just like, purchase more inventory, we would love to help. So, last month we ran this super successful campaign and we funded hundreds of store owners. We gave them up to 50K, absolutely free. So no fee. Normally we charge that 6% fee, but last month we did it for exactly 0.
Okay.
And on our website, you won't find mention of this anymore. It's gone. But we thought, like, for listeners of the podcast, we're ready to make it happen again. So, all you have to do is like reach out to me at like Asher at weareuncapped.com with the subject line like secret 50K and a bit about you. And yeah, we'd love to see, if you can qualify you and get you funded. So, like, do it now. Don't wait. It takes like 2 minutes.
Seems like a pretty fair offer.
And I'd be really excited to hear
expecting
about
on Monday
you
morning to
and your
wake
store.
up and see 50K in my bank account after doing this podcast. I don't want to repay it though.
Well, send
I
me
just
the
want money.
message. Let's do it. I'd love to.
All right, damn it. All right,
Well, you got to
that
eventually
would be
repay
pretty
it.
awesome. Like,
That will be the next
absolutely
level
free
offer.
50K.
Maybe one day. That'll be the
Well,
philanthropist
even still, it's
offer
obviously
that'll
sounds
come
pretty
when
darn
you
fair.
want.
I mean,
Yeah.
0% interest loan basically of 50K. If that's of interest to your business, again, it was Asher at Uncapped.com. We are Uncapped. Asher, we are Uncapped.com. And the subject line
weareuncapped.com.
was Secret 50K. All right. Sounds pretty cool. Tell him you heard about it on EcomCrew, so
That's
Asher
right.
feels obligated to buy me a beer next time he sees me or something. Excellent. Thank you, my friend. Thanks for coming on and thanks for your time
Absolutely.
today.
I would love to.